The late Kerry Packer once said,
"Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads read."
Hey everyone, Tuan Duong, founder of Duotax Quantity Surveyors, here for another video designed to help you become a better property investor. If you're anything like me, you're constantly on the lookout for ways to save that little bit more money. So in this video, I'm here to share with you 17 property tax deductions you can claim to help reduce your taxable income on your investment property, as well as 4 tax deductions you can't claim. I can tell you that most people are missing out on a whole heap of tax savings. The reason is that most people just don't have the expertise or know-how to figure out what they can claim, when they should claim, how much they can claim, and what they need to keep as evidence in case the ATO comes knocking at their door. This isn't necessarily their fault. It's just that unless you're an accountant, most people aren't reading up on tax deductions in their spare time. Except maybe me. Anyway, moving on. Before we get into it, we want to be clear that this video is for informational purposes. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent who can give you the best advice for your situation. So let's get started. Number 1, interest on your loan. This is the single biggest investment property tax deduction you can claim. Unless you're filthy rich, chances are you've taken out a loan from the bank to purchase your property, which means you need to pay interest on this. That means you're entitled to claim any interest charged on the loan as a tax deduction. Number 2, property depreciation. Let's be real, I'm a quantity surveyor. I do tax depreciation on investment properties for a living, so this is my thing. After interest on loans, this is the second biggest tax deduction claim you can make. But what's depreciation? This is the wear and tear and the loss in value of your property and its assets over time. Click the link above to watch our other video that explains this. This loss in value is what you can claim as a tax deduction. What's great about tax depreciation is that you don't just claim it once, you can claim this for years as long as you don't sell or move into the property. If you've bought a rental property, get in touch with a quantity surveyor like us at Duotax to estimate how much you can claim. In our experience, most investors who work with us claim an average of $7,000 in tax deductions in just the first year alone. And the best bit, the cost of our report can also be claimed as a tax deduction. Number 3, advertising costs. Sites like realestate.com.au or flatmates.com.au are often used to find tenants. The cost of advertising to find these tenants can be claimed as a tax deduction. Number 4, agent fees. If you prefer to leave it to the professionals, you can appoint a property agent to manage everything with the property. They'll usually charge you anywhere between 6 to 8% of the rental income as part of their fees. Again, make sure you can claim these as a tax deduction. Number 5, legal expenses. Legal counsel when you're dealing with a difficult tenant is a type of legal expense you can claim as a tax deduction. Unfortunately, solicitor or conveyancer fees for purchasing or selling the property aren't tax deductible. Number 6, council rates. Council rates are collected by local councils to help with improving services and facilities to the community. Things like garbage collection and waste management fees are what you're essentially paying for. Number 7, utilities. Things like electricity, water, and gas are claimable as tax deductions. But be careful, if your tenant is paying for it, you won't be able to claim this as a tax deduction. For example, some apartments may not have independent water meters, which means that water rates are covered by the landlords. This is something that you can claim on if your tenant is paying for their electricity and gas themselves. Number 8, insurance. Insurance like landlord insurance are no-brainers because you don't know what might happen to your property. Again, these are tax deductible expenses. Number 9, repairs and maintenance. This is a tricky one. Maintaining or repairing a property can be claimed as a tax deduction, but not necessarily the renovations itself. The key thing to understand is that you can repair the property, but if you improve the property, you can't claim the repair and maintenance costs. For example, you might need to repair or replace carpet in the property, but instead, if you were to install wooden floorboards to improve the property, you won't be able to claim it against repairs and maintenance costs. This would be a depreciable asset. Number 10, pest control. hiring a professional pest controller or the cost of doing pest control yourself can be claimed as an immediate investment property tax deduction. Number 11, land tax. Here's another confusing one. Land tax is a tax deduction. What you need to make sure you understand is that each state or territory has its own regulations around land tax. So we always recommend that you consult a tax agent or accountant who can help you make the correct claim. Number 12, tax agent fees. If you've got an accountant or tax agent, then their fees are also tax deductible. Number 13, cleaning fees. Whether it's ongoing cleaning or just cleaning expenses that are incurred when a tenant vacates your property, you can claim this as a tax deduction. Of course, if it's a tenant paying for the cleaning, you can't claim this as a tax deduction yourself. Number 14, gardening costs. Just like repairs and maintenance, as long as you're repairing or maintaining the gardens or lawns of your home, then you can claim them as a tax deduction. Any improvements made like significant landscaping project can't be claimed. Number 15, body corporate or strata fees. If you live in a townhouse or apartment, then it's likely you'll need to pay body corporate or strata fees for the upkeep of the public facilities. Again, provided the tenant isn't paying for it, you can claim them as a tax deduction. Number 16, stationery, phone and internet costs. If you incurred any expenses as a way of managing your investment property, then you can claim that as a tax deduction. Number 17, bank fees. Besides interest, if there are any other fees associated with the purchase of your investment property, you can claim these as a tax deductions also. So that's that for 17 expenses that you can potentially claim, but what can't you claim? Number 1, travel for managing the property. Whether you're carrying out inspections or even going interstate to view the property, you can't claim on this unless your business involves renting and managing rental properties. Number 2, solicitors and conveyancers fees. Like I said earlier, you can't claim this regardless of whether you're buying or selling a property. Number 3, stamp duty fees. It's a popular question we get, but unfortunately, the answer is no. Number 4, personal use expenses. This means if you've got a vacation rental property and you stay there for a weekend, any expense incurred during this period can't be claimed as a tax deduction. So there you have it, 17 tax deductions you can claim and 4 that you can't claim. If you have a friend, colleague or family member who needs to hear this, I'd love for you to share this with them. If you got a lot of value out of this video, check out our YouTube channel to subscribe for more. And make sure you click on the bell icon so that you get notified of the next video. And if you're looking to purchase an investment property or just recently purchased one, get in touch with us at DuoTax to find out how much we can help you claim on your next depreciation schedule. I'm Tuan Duong, see you next time.